Hello guys, I have some money to invest, but I currently don't know how and where to invest it. I have a friends for you to read. Could you please read this? This is very interesting book by the Jim Roger, and get back to me in the 2 weeks, so we can discuss what is the best option for me. And I think this is the time is sufficient for you. Okay, you ready? Yes, good. Okay, see you in the 2 weeks. Bye. Okay. Good evening, everybody.
Good evening, Pak.
How are you? Fine?
Fine.
Okay, very good. Have you read from this book last 2 weeks?
Yeah, ready.
Okay, nice. So let's start to discuss for this book. Are you ready?
Ready, Pak.
Who want to first?
Okay, Pak, I would like to start first.
Okay, please.
So basically, after I read the book, there are several options of investment in this case.
Okay.
The first is stock, but the thing is currently most equity are overpriced on historic basis. So it will be difficult for you to get income from the stock. The second one is the bonds, but the thing is most of them having a very low interest through the decade, so it will not make you rich. Real estate is a good investment, but currently those are already too expensive, so you will not get any payback for that. And the currency, I think you can explore this, but it will be quite risky for you. And then some government is actually playing a monopoly for their currency. So we recommend you to invest on commodity.
Okay, this is the choice for the always my
Yeah,
investment.
we recommend you to invest on commodity.
What is the commodities and why I should choose for these commodities?
A commodity, which are raw materials, natural resources, hard assets, and real things, are essentials to the life of everyone. We are currently surrounded by commodities in our life. Without the commodities, the future market to set and regulate the price, the things we need will be overpriced and also scarce. Okay, and the example of the commodities itself is like oil, gas, wheat, corn, cotton, soybeans, aluminum, copper, lumber, and everything that's around us actually.
I want to add something, Pak.
Okay, please.
So basically, some people said that commodity is very risky since there is not much expert who is having the experience for commodities trading as well as the license for that. It is not certain as well, but it is proven that when the stock is falling, most commodity are actually rising or booming. So there is a negative correlation between stock and commodity. And as you know that most Asian countries currently dramatically growth over the past 25 years. And then ironically, most people are focusing on stock trading starting 1990s. So it is a huge opportunity for you to invest back.
Okay, please explain a little bit detail for these commodities.
The first one is oil. Actually, there's no major oil field that has been discovered for more than 35 years. Most of the giant reservoir has been 50 until 70 years old. And no new refinery were built during this time. And the second one is natural gas. Production in America is not in pace with the demand and new deposits found, but the cost of exploration will be more expensive due to the depth of the deposit. And also we have metals, no new mine opened in the last 20 years also. And the last is sugar. It is because lack of sugar plantation, sugar has become an energy source as well, converted into ethanol. It is currently in low supply and increasing demand also.
And the other thing about commodity is the nation economic health, it's not a deciding factor for commodity. Because no matter how badly the economy is, the necessity of life and basic means for jumpstarting the economy is still required, and it sustains high demand for commodity. So the commodity futures are positively correlated with the inflation. The higher the inflation is, the higher is the commodity future is. And then war and political chaos is not really reducing the price of commodity, but it even make it higher. There will be a setback and the risk. So there are several things that you need to understand as well.
But wait, Pak, commodity is something new for us. So I think I can see there is a risk before we entering the commodity market. So I'm suggesting that we have to do a preliminary research before entering the commodity market. I think we have to understand the first one is the trend and also the demand and supply. That's probably I would like to suggest that we use a CRB. That's one of the things that we can use for the review before entering the market. What do you think, Pak?
Okay, you mean there is the risk. So what advantage for me?
So you can take advantage of a growing demand. So how do you take advantage? First, you can buy shares of companies that produce in commodities. However, sometimes the stock price has little things to do with the actual performance of the company, because there's a lot of external factors that takes into account, such as government policies and also management. Second, you can invest in countries that produce commodities. However, there are internal threats that are way less predictable. And third, you can invest in real estate, also countries that are rich in commodities. And fourth, you can buy commodities, and we consider this as the best form because we can manage our own trades, or we can use trading services. However, there are many options for this. The options are you can open an individual account, or you can also open a managed account, and also a trading futures option, and many others.
Okay, so Pak, we are suggesting to buy commodities directly. But step into the commodities, we have to understand the concept itself, which is a balance between the demand and the supply. And we have to be aware with the two things before entering the commodity. The first one is because the commodity is unregulated in the market. And the second one, we might be deal with something unpredictable. For example, the strikes, bad weather, like that. And I have to say that the trading commodities is like a trading of future or contracts. So we have to take a look at 4 standard, the quantity, description, the delivery date, and also the payment terms.
Okay, so for the futures of commodity price itself, it's a fixed price. But the price of the futures themselves is never fixed. It is based on the supply and demand estimated by the buyers and sellers about what commodities will be worth at any given point of time. In the world of commodities, speculator is crucial because it keeps the market moving and liquid. And you can go long or go short. It depends on what you want. You can buy and hold it for a long time, or you can just sell it in a short period of time. And to avoid getting wiped out, you must put a stop loss stop order.
And I think, in terms of the world economic, I think China and India could be big in terms of the commodity itself. Why? The first one, because for the China itself, we can see the population, which is a big population means a big customer. So there will be a high consumption in the commodities from China, and so did with the India.
Okay guys, generally I already get from the Euro information that already explained, and but to more in detail, can you explain to me in detail from the each commodity? Okay, thank you for your explanation for the detail, and I think this is very interesting for me, and I will diversify my investment in those 5 commodities.
Okay, so how much are you willing to spend? We could probably help you in diversifying your options.
Don't worry, I want to take my money, my pocket. Okay?
Okay, Pak.
I think it's enough for you.
This one, guys.
That's all.
Are you kidding us, Pak?
No, just waiting. Okay. What is this?
Come on, Pak.
Where are you going? Where are you going? Come on, please. What is the problem? This is money. This is very big money. Come on, guys. Where are you going, guys?
Gue perlu yang supply ini.
Bro. Cut. Come on, Pak.
This one, Pak.
Are you kidding me, Pak?
Okay. Please,
Cannot be, Pak. Cannot be.
Belum.